In March 2000, the technology boom reached its historic peak.
The NASDAQ composite surged to nearly 5,000 points.
Technology startups were attracting billions from investors.
Many companies had little revenue and no profits.
But investors believed the internet would change everything.
Investors poured billions into internet companies.
Venture capital money was flowing at record speed.
New internet companies went public almost every week.
Stock prices climbed far beyond traditional valuations.
But beneath the excitement, cracks were already forming.
By late 2000, volatility began spreading across the market.
Investors were starting to question the technology boom.
Many internet companies were losing money every quarter.
The optimism of the late 1990s was beginning to fade.
The technology bubble was starting to crack.
By early 2001, the market downturn was impossible to ignore. Technology stocks began collapsing across the board.
Many internet startups were running out of money.
Investors suddenly stopped funding risk internet ventures.
In March 2001, the United States officially entered a recession.
Technology companies began cutting thousands of jobs.
Across the country, layoffs spread beyond the tech sector.
The labor market began showing clear signs of stress.
Businesses reduced spending as uncertainty grew.
Corporate investment slowed across the American economy.
The Federal Reserve began cutting interest rates aggressively.
We talked to Bill O'Brien to stop by Italy.
Lower borrowing costs were meant to restart the economy.
Interest rates began falling faster than investors expected.
Banks started offering cheaper loans to businesses.
The goal was to stabilize the weakening economy.
By 2002, unemployment was rising across the country.
Many workers struggled to find new opportunities.
I know. Yeah.
Companies continued reducing investment and expansion.
The American economy was approaching its lowest point.
The NASDAQ index had lost nearly 78%.
By 2003, the economy slowly began stabilizing.
The Federal Reserve had pushed interest rates close to 1%.
Cheap credit began flowing throughout the economy.
Consumers slowly started spending again.
signs of recovery were appearing across the country.
Low interest rates made buying homes far easier.
Banks were offering mortgages to millions of Americans.
Bring the next beam over here. Watch the alignment on the second floor. All right, team, let's keep it moving.
Property prices started climbing at a rapid pace. Property prices started climbing at a rapid pace.
Credit conditions were becoming increasingly loose.
Riskier mortgage loans were entering the market.
Demand for housing continued rising rapidly.
The housing boom was gaining unstoppable momentum.
By 2005, the housing boom was accelerating nationwide.
Home prices were rising faster than incomes.
We need to prioritize the FHA loans first.
I know, but look at this stack for underwriting.
Investors increasingly treated homes like financial assets.
But beneath the growth, serious risks were building.
Across America, housing prices were rising at historic speeds. Millions of mortgages were being approved every year.
Speculators were entering the housing market aggressively.
Few people realized a new bubble was forming. The seeds of the next financial crisis were already planted.
By late 2005, the housing boom appeared unstoppable.
Lenders were competing to approve more mortgages.
Real estate had become a popular investment strategy.
Yet the financial risks were growing beneath the surface.
A housing bubble was quietly taking shape.
The Q3 reports look exceptional.
Absolutely. Projections for the next quarter are even better.
Consumers were confident and spending freely.
Credit was expanding across the financial system. A housing bubble had quietly formed across the country.
The financial system was quietly becoming more fragile.
A housing bubble had quietly formed across the country.
Yet most investors saw only prosperity.
The risks were building deep inside the financial system.
Few people realized what was coming next.
The seeds of the 2008 financial crisis had already been planted.